today we're talking about CPI because the Fed just released their notes, right?
This was like the day.
Yeah.
This was that once in a lifetime thing. CPI came out this morning. The Fed talked, and they released their summary of economic predictions.
Is that unusual?
It's extremely unusual. They're usually on different days, and it doesn't usually happen all at once.
And I always thought it happens on 15th, but today it happened a little early or something?
It moves around. Okay. Let's talk about, so one, this was a special day. And let's drop the mic real quick just so we don't have to leave people in suspense. It was all good except for a little bit of the Fed stuff. So that's what we're going to talk about later.
So what was the CPI today?
I think we're going to summarize this first with Nick T from the Wall Street Journal. He said on Twitter X, Fed Governor Chris Wallace said he wanted to see inflation reports where you don't have to look at the second decimal plate to find good news. This was one of those reports, and the bond market agrees. So the bond market immediately responded to the report. Interest rates went down instantly. And what happened is there's basically 4 metrics. All 4 of them beat expectations. So, I mean, today was like, it was the bingo card of all bingo cards. So you have CPI headline, and then you have core. And core, to remind everyone, that excludes the volatile food and energy component. And then you have the month-on-month and the year-on-year read. So headline CPI was projected to come in month-on-month at 0.1, came in at 0, below expectations. The year-on-year was projected to come in at 3.4%, and it came in at 3.3. Boom, we got one of those reads we were looking for. But the Fed and everyone else cares more about core. Core CPI, we got the win again. Month-on-month was predicted to be 0.3, came in at 0.2. Year-on-year was predicted to be 3.5, came in at 3.4. So all 4 of the items we wanted missed to the downside. P.S. This hasn't happened in a while. This is phenomenal. Bond market then responds. The next thing that was super interesting, and I missed this in the beginning. So there's an item inside of core, we call it super core. So super core inflation is the term to describe the rising costs of goods and services minus food, energy, and housing. Super core actually went negative. So that meant that prices weren't just dropping, they were deflating. They were going down. That was brought to us by Zero Hedge on Twitter. Then I looked at macro micro, and they basically were looking at it in month increments. So the 3-month run, the 6-month run, the 12-month run was at 3.3 versus 4.1. The 6-month run was at 3.7 versus 4. The 12-month run was at 3.4 versus 3.6. It took everything in my power not to text you this morning and tell you all of this because I wanted to come here and explain it in person. So the market immediately goes, oh my goodness. And you know, we respond to euphoria, right? So the bulls are out like crazy, market starts to rip, stocks go down. Then I went and looked at the price cuts. In other words, because we've talked about before, the market prices in and makes predictions on what the Fed will cut, how much they'll cut, and when they're going to cut. So they're pricing in now, fully pricing price cuts in both November and December. And there is basically 1.97 price cuts priced in for December, 1.23 price cuts priced in for November, and the market's pricing in about 0.8 for September. Okay. When they talk about a price cut, generally they're talking about a 50 basis point price cut. So if they say 2 in December, that would be like a whole point the market believes we would cut in December. They believe we'd cut about a half a point in November, and there's a potential for a half a point cut in September. So then what's the Fed do? The Fed comes out and Jerome Papa Powell goes, you know what, I got to throw some water on this fire. Because this came out in the morning and he talked like 3-4 hours later. Plus they released the summary of economic predictions. The summary of economic predictions is where all the Fed members' notes and their predictions for the future are gathered together, and they literally tell us what everyone thinks where we're going. Papa Powell comes out, and like I thought, he was hawkish. Now, not super hawk. We're talking like on a scale of 1 to 10, he's like a 6 or a 7. He's there to say, it's all good, boys and girls, but he was definitely there to put the fire out. And so the Fed came out and said, no rate hikes. Okay, rates are stable. We're going to keep everything the same. But the Fed board in the background wasn't unanimous about whether to hike or not hike. And they raised the inflation forecast from 2.4 to 2.6. And this is what I mean. They started dropping some water on my fire. And then they looked at the median forecast and they basically said the Fed themselves believes there's only one rate cut this year.
That's what he said.
It's what it says in the summary of economic predictions. So they hide stuff deeper in the data that Jerome doesn't say face to face. The Fed says, inflation is easing, but it still remains elevated. Oh, more water on my fire. And he talks about the stickiness, and I don't disagree with him. What was also interesting, and then one of the reporters called this out in the audience, was the core inflation, the median prediction rose from 2.6 to 2.8, but core CPI this morning came out at 3.5. So we're already moving in that direction, and we can basically hit that. So the reporter asked, well, what gives? And he goes, this data comes out a little bit before, and we don't really see any reason to redo it just because of one report. More water on my fire. So he was trying to calm us down, and then he said, he didn't say totality of the data, or if he did, I missed it. He said, we'll continue a meeting by meeting approach. Based on the data, we'll make our decisions. In the summary of economic predictions, this is what was hidden in here. I did not like this. They thought the Fed's fund rate by year end used to be 4.6, which would bring rates down. Now they're predicting 5.1. So that's kind of unclear if they changed it or didn't change it before the CPI.
What are we at right now?
It was just 4.6 and what is it actually?
Yeah.
It's a moving number. So it is between 5.25 to 5.5.
Okay, got it.
So,
but that's significant. That's a half a point.
Bingo.
Raise.
Their prediction raise is we're going to be a half a point lot. So they came out and they're like, slow down, boys and girls, higher for longer, don't YOLO it yet. We need more recent inflation readings. It's easing somewhat, but we don't have greater confidence. That's what the data says. That's what it was in there. What has also happened is Bank of Canada cut, the European Central Bank cut, the Swiss cut. So as these major economies start cutting, their version of the Fed starts cutting, that's creating downward pressure on us here in the U.S. to start to cut. So I would say I'm bullish today.
On how many cuts this year? How many interest rate cuts?
I'm not bullish on that. I'm bullish on real estate. I'm bullish on housing. I'm bullish on the U.S. Like it's going to be the 4th of July soon, and I'm like, go America, go. Let's go blow some stuff up. And the reason I say that is we know it's an election year. And traditionally speaking, if we go back in history, in election years, rates trend down towards the election. Rates trending down is good for real estate. It's good for the stock market. 2, we know that this signal allows the Fed to get closer to cutting. 3, inflation is cooling and easing more than they want to put out. Also, in the jobs data, we did see that kind of early warning flare shoot up. And in that jobs data, they're like, the headline numbers, 250,000 jobs were created. We lost 628,000 full-time jobs. We created 180,000 part-time jobs. So the Fed's seeing this in the background. So I have a prediction, and I also have a fear. The prediction here is that the Fed is going to cut at least 1 full percentage point this year, okay? And I think it's going to come later in the year, probably 2.5 points. This is just the feeling today. The fear is that if the Fed starts cutting too early, and remember, I benefit from cuts because it makes real estate cheaper. The fear is if they start cutting in July or September, I think they're too early. I would like them to create a little more pain and wait a little longer and give me a hard, definitive cut towards the latter part of the year, because then that sets us up for a really strong 25, and it cools the economy and inflation a little bit more. Because like we talked about on that episode about the asset melt up and stagflation, that's still a fear in the background. And I don't want the Fed, because of political pressure, because of pressure from other banks, to feel they need to cut a little too early. Also, this is a messy political year. I want them to really wait until we're done. For our listeners, what I want you to be thinking about is, now, what does this mean for us in real estate? What does it mean for buyers, for sellers, for my hardcore investors? It means we're somewhere in the dip. Are we at the bottom? Don't know. Are we going up the other side? Don't know. On this side? Don't fully know. But we know rates have peaked. We know inflation is cooling. So we're starting to get these indicators that are saying good and better times are coming. And as rates go down, demand goes up for real estate. So my investors, this is a buy signal. My first-time home buyers, it's definitely a buy signal. Go soon, because you'll get priced out of the market. For my sellers, you need to be looking and thinking, is it this year or is it next year, depending on my long-term goals? But for my hardcore investors, this is definitely the buy signal. The discussion I had with an investor earlier today who owns multifamily already, big apartment buildings, he said, I feel this is a go shopping moment. I'm starting shopping again, Anton. Let's find some dirt. Let's see what we can build. Let's go buy some stuff from other people. I said, I feel the same way, sir. It's game on like Donkey Kong. And he said, what are you seeing here in the Seattle Metro? Your listings with other people's listings. I said, we've been seeing bidding wars on anything that's priced correctly. We had a massive bidding war on one of our properties, and there was a piece of new construction that got bid up like 16% over the list price with 30 offers here in Bothell. He said, okay, my gut's telling me the right thing. And all of our listeners, we're just telling you the stories. And based on the totality of the data, it may change. So subscribe for more, and let me know in the comments if you think this CPI report was enough to make rates go lower.